Hello, ladies and gentlemen. This is Jimmy. This is another trading psychology session with me. And today I want to talk about a really important topic, and it's the topic of a winning mindset. Trading is all about mindset, and we know this. However, not so many of us talk about the important elements of a winning mindset. And in this session, I want to talk about mindset, how you can cultivate the right mindset, and some misconceptions about emotions and how you can get to the next level. I hope you guys are ready for this new session. Just a few words. Probably some of you don't know who I am. I'm Jimmy. I'm a master NLP coach. I have a background in positive psychology, and within the Burpnet side, I basically help people with cultivating right mindset. I do this by utilizing NLP skills. I do this by utilizing hypnosis, and I do this by using neuroscience. And that's actually my methodology. I use three of them to help out people. For me, it's a triple win. I mean, I help members, I help myself because servitude and helping out others is one of my core values. And when you have the right mindset, it also basically helps you in other areas of life. It's easy as that. A good trader or trading and taking this seriously can help you to become a better person. I know it may sound a little bit cliche, but it's really true, believe me. Before we continue, a few words. One, this is your safe space, as in you are actually required to participate and to talk or to chat, to ask me questions, maybe to challenge me, sharing your own experiences, and so on and so on. Because being here is a good thing. It shows something. It tells me that you're taking trading serious and you're taking mindset serious. However, just listening to me, it's not enough. Just listening to anyone else, it's not enough. Because at the end of this session, every single one of you is going to take an action, at least one action you're going to do at the end of this session. I hope you guys are happy, are ready, and let's continue. Your mindset. I mean, if there's someone who can talk a lot about mindset, it was Mark Douglas. One of his quotes was, "You create your own game in your mind based on your beliefs, intents, perceptions, and rules." And I'm happy as an NLP coach that he started with beliefs. It's always about beliefs. Another quote is, "If your goal is to trade like a professional and be a consistent winner, then you must start from the premise that the solutions are in your mind and not in the market." And this is so true. So let's talk quickly about beliefs. I know a lot of people, they have some self-limiting beliefs, and I've been coaching a lot of traders for a long time. And when we start with an intake and I dig into their belief system, with their belief system, I particularly talking about their beliefs they have about the market and about themselves as a trader or an investor. It's shocking, it's but maybe not surprising. Most of these beliefs are not empowering beliefs, but self-limiting beliefs. For example, the market is always against me. For example, I am bad in risk management. For example, other people outtrade me. Or for example, I don't have time to work on an edge. So if you have this belief and you're entering the market, you actually entered this market with a huge handicap. I mean, you basically lost the game if you have these beliefs. So the first thing you need to do as a trader, and the mindset is everything about beliefs, and a belief is actually nothing else than a thought you have, which you have reminded you, which you have repeated many, many times, time over time, until it became a subjective truth for your subconscious mind. So your subconscious mind is there for a few reasons. It's one, to save you. Secondly, it's trying to protect your energies, to protect your self-image, and but also your body. So if your self-image is, "I'm a bad trader," your subconscious mind will basically do everything to remind you that you are a bad trader. It's easy as that. That's your belief. You have programmed your subconscious mind to believe so. And if your subconscious mind is programmed to do so. It will remind you to do so on a regular basis. I believe and I'm convinced that you can override this belief by taking actions and talking differently with yourself. Most of the thoughts you have today are basically 99% the same thoughts you had yesterday. And the thoughts you had yesterday, let's say 90% of them are just a waste. Just it's maybe just not true. You're not what you're thinking. You are what you're doing. There's a big difference in that. So the key takeaway is here: be mindful of your own thought pattern, because your subconscious mind, see your subconscious mind as someone who is always eavesdropping your internal talk, your thought process. And if this thought process, your thinking, is negative and it's not empowering you, your subconscious mind is eavesdropping, writing a note, and it's telling you, okay, you are a bad trader. I will remind you when it's needed. I hope this makes sense. If it doesn't make sense, post a comment and we will dive more into that. Another key takeaway. Well, let me otherwise ask you a question first. Let me check if you guys can hear me, right? If not so, let me know. Um, my question is, emotions, are they from a trading and investing point of view, are they good or bad? Are emotions a good thing or a bad thing? How I see it as a NLP coach and someone who studied positive psychology, I don't think there's anything wrong with emotions. Most of our decisions are based on emotions. And I don't think emotions are a bad or a good thing. And I believe emotions are actually a neutral thing. They are just there. It's actually information. It's trying to tell you something. There are positive emotions and negative emotions: love, disgust, happiness, sadness. These are actually the basic emotions. So from there, many other emotions are derived actually from the basic emotions. The biggest enemy of a trader is not the emotion or emotions. It's actually the lack of understanding the emotions and the lack of regulating and managing the emotions. It's impossible to fully control your emotions, because they just appear, they just happen, you just have them, just like your thoughts. It's impossible to deliberately control your own thoughts, because they are just impulses, they just happen. And the same goes with your emotions. See emotions as a huge ball, and you in a swimming pool. You have this huge basketball, and you're trying to hold this basketball in the water. And once you're losing grip, it's popping up right from a swimming pool with force. Same with emotions. You cannot control them. If you're trying to control them, they will backfire hard. Really, they will backfire hard. And they basically just see emotions as a messenger. And if you're trying to suppress them, ignoring them, they will come back frustrated, and they will have you only, like, if you're trying to suppress them, you basically fuel your own emotions. Emotions are actually there to be allowed. So if you have any of these emotions that comes, with trading, for example, FOMO, disappointment, because your stop loss was being triggered, or you had to endure a series of losses, or you missed out a certain IDO, um, that's a disappointment. It doesn't matter. You are allowed to feel this feeling. If you do not so, what will happen is that this emotion will come back, and it will interfere basically with your decision making process. And as a trader, we want to have a clear decision making process. We don't want to be interfered with unprocessed emotions. We want to process them so they don't backfire us. That's one. Secondly, is these emotions are actually carrying a lot of information, valuable information. If someone comes to you with a lot of gold and it's giving you, like, here, take my gold, you will take it. It's valuable. The same with emotions. If you have them, just listen to your emotions. It's actually a message, and this message shouldn't be ignored. Shouldn't be ignored at all. And I fully agree here with the statement of Partial Daily. Emotions are constantly providing us with opportunities to improve our thinking. And I also believe this. In psychology, they call this metacognition. It's the thinking about the thinking, or being conscious about your subconscious. And it's only possible if you allow these emotions and if you write them down, think about them, having a coach, having a psychologist, or a friend you can talk with. At least you need to do something to be aware of it. The more you're aware of your emotions, the better the trader you will become. As you guys know, this market is fueled by emotions, from disbelief to belief, from anger to thrill, from euphoria to depression. My question is, where are we in this Bitcoin cycle? Where are we? I'm going to ask you two questions. Where are we in this Bitcoin cycle, you think? And then ask yourself the question, do I think so because I made this guess based on my own P&L and my trading portfolio performance? Or is it just purely based on price action and by being objective? These are two different things. What people often do is when they lose money, they reflect this basically creates a directional bias about the market. You need to ask yourself always, um, where are we in the cycle? And has my own trading performance or my trading or my P&L, my overall P&L, influence on where I think where we are? Because these two things are different, 100% different. You shouldn't this you should if you want to know where we are, just forget about your P&L and try to be objective, and don't let your P&L be the key indicator of where we are in this cycle. Just a few facts. I always tell them also in the Discord channel and in my other sessions. Without a vision, we perish. Without a plan, we perish. It's simple as that. Because if we just repeat the same thing, we just and you don't have a vision, you will be left with the vision of our past. So meaning you will repeat the same mistakes over and over again, over and over again. There's this beautiful saying, what gets you here won't get you there. It's really true. For example, if you're working for a company, let's say you're a senior consultant, you want to become a manager. To become a manager, you need to be different than a senior consultant. Basically, you need to act and think like a manager before you can become a manager. Uh, so the same goes with trading. You need to have a vision. And now the question is, do you have a vision? And do you have a plan? If the answer is no, I hate to say it, but then you have a huge handicap. You have a huge handicap. Most likely you will act like the average. And what's happening with the average in the market? They're losing money. So if you keep repeating the same thoughts will lead to the same feelings. The same feelings will lead to the same outcome. The same outcome will again lead to the same feelings. And then you're in this loop over and over again, over and over again. So have a plan And as I said, um, the plan always starts with your beliefs. So always write down your premises, your beliefs you have towards trading, and check them first. And then check your vision. What kind of vision do you have about yourself as a trader? And then think about your purpose. What do you want to achieve with trading? And then think about a strategy. So what most people do is, um, they see Bitcoin, they see crypto, they see, okay, that's super interesting. They just dive into crypto, they buy, and they thinking, okay, what will be what kind of strategy do I need? Um, a good question, but they skip three essential steps. One, what are my beliefs? What kind of beliefs do I need to survive this market? What about my vision and plan? What's my purpose? And then think about the strategy. Most people, they just think about the strategy without thinking about these other three things. And I see them as layers. Like the first layer is your belief, and then your vision, and then your purpose, and then a strategy. If you just immediately start with a strategy, um, you have a handicap. So my key takeaway is have a plan, start with your belief system first, and then vision, and then your purpose, what you really want to achieve, and your why you're trading, and then think about strategy. Strategy is the final layer. If you understand what I mean. Yeah. So the beliefs are really important. Not sure if you guys know this guy. He's the writer of the book Being Right or Making Money. Ned Davis. Ned Davis is I think a financial analyst. He has also his own group, Ned Davis Research Group. Um, I think it's worthwhile to read this book, to order this book. This book was encouraged by CMT, and I enjoyed this book a lot. So I want to talk about how he approached trading. So one of his sayings, one of his quotes is, there are two types of investors, be they large or small. Those who don't know where the market is headed, and those who don't know that they don't know. And that's funny. We actually don't know. But if you think you know, you actually don't know that you don't know. And this can be caused by different things, by confirmation bias, or you're being influenced by others, loss aversion, hindsight bias, and so on and so on. If you truly want to have this winning trading mindset, you need to think in probabilities, and there's no truth in, in trading. Everything is random. But the problem we have with randomness is we are not wired to live in an environment or work and operate in an environment with so much randomness, and the market is full with randomness. What we should do as trader, this should be also anchored in our belief system, is we must embrace randomness, period. If you don't embrace randomness, as in the outcome as randomness, you will get frustrated, you will get stressed out, and you will always try to find reasons why things happened. And I don't think this is a good thing. And I don't think that this logical way of thinking should be applied in trading. So embrace randomness. So something about cognitive flexibility. This is an NLP communication model. What I want to say here is we basically tap into this world through our senses. And then because of our filters, we delete information, generalize information, or distort information automatically. Your filters could be your memories, your decisions, your meta program. So meta programs see it as personality characteristics, your values, your past experiences, and so on and so on and so on. So if you're truly like convinced that we are in a strong bull market, or you know where the market is heading to, you will receive information that goes actually against your belief. What will happen is you will delete, generalize, or distort information in such a way that the new information will fit your bias. That's how strong your subconscious mind is. So your subconscious mind is there to what? To um, maintain your self-image and also to maintain your beliefs. And if this is the case, you will create a representation internally. This will create a state. Your state could be angry, right? And because you're angry, this will affect your body. It will influence your body, and then it can lead to a behavior. And this behavior has again a outcome, and this outcome most likely will strengthen your internal representation, your state, and then you're getting stuck in this loop. So now we know this, you should be aware that what you see and what you hear, what you have perceived, what you taste, um, and you tap into this world, you are receiving a lot of information. Your mind cannot um, um, process all of this information, and it will automatically delete, generalize, and distort information. So if you're really bullish, but there are a lot of bearish events going on, you don't want to neglect you don't want to, how do you call that? You don't want to neglect the negative events. You want to take them into consideration. So you need to have an open mind. So be aware of this. I do believe in the top-down mechanism. So if you understand where some certain things, thoughts, biases are coming from, then it's for us easier to manage them. Because this is your beautiful brain. I mean, if you truly think that there's danger, your brain will tell you there's danger, and your fight, flight, freeze mechanism will be activated. Sometimes this amygdala you have two on both sides of your brain, it will get activated just for minor things. I see them as minor things. For example, the market is tanking. People are getting, they freak out. They are in this fight, flight, freeze modus. They should actually ask themselves, how does this affect my long-term strategy? Most people, they are thinking too much in short-term scenarios. So if the market tanks, I don't think it's for me worthwhile to feel depressed, to fight, flight, or freeze. I just continue and I accept the randomness that comes from the market. Okay, a few lessons from Ned Davis. So Ned Davis made a lot of money. He lost a lot of money. He made a lot of money. He lost a lot of money. And then he was working on how he called it a timing model. Conclusion is everyone, an investor and a trader, should have a objective model and being disciplined with it. So there are two factors here. One, have a objective model that helps with trading, and two, be disciplined. Sounds easy, so let's dive into this. He said, have objective indicators. You should ask yourself, what kind of objective indicators are you using? Myself, I use the RSI. I use often the EMAs, the Fibonacci levels, the Replicator Pro as a system on top of my own system. And these are giving me like objective information. It's me, of course, that interprets as bullish or bearish. But for me, for example, if I see a bearish divergence on the weekly or the 3-day chart, momentum is fading away, price is going higher, this is a strong warning signal for me. And I'd like to take profit when this is happening. This is one of my objective indicators. It doesn't matter how bullish I am, I just take profit and I don't regret anything. Even though like the market continues pumping, I respected my system, and eventually the system will respect me. Second is discipline. Have discipline. Maybe it's really easy said, difficult done, but you need to know about discipline is it's overrated and it's underrated. And please allow me to explain. You need to know that discipline is a resource, a limited resource. Actually, it's fueled by your willpower. Your willpower is not unlimited. You will get tired, it will get depleted. The more depleted you are, the less discipline you have. Everyone should know your discipline leakers. We all have personal discipline leakers. And as traders, we want to avoid them before we, like, if you want to trade, avoid these discipline leakers. Discipline leaker could be, for example, checking social media for a long time, for a long period of time. This can drain all of your willpower. Or having a fight with your partner, or with your boss, or with your coworkers, or it could be basically everything. Like, we all have discipline leakers. So please write down on a piece of paper or mentally, what are my discipline leakers? And try to see if you see a connection, a relationship between bad performance and your discipline leakers. For example, when I'm tired, and I'm sleep deprived, I don't have a lot of discipline, to be honest, and I'm acting pretty impulsive. You don't want to act impulsively in a random market. You need to be disciplined. And then I know, okay, this is not the time to trade. So often I don't trade after 11 p.m. or 12 p.m. This is a no trading time zone for me. Okay. Flexible. With flexible, we talking about cognitive flexibility. People, they marry with their biases, and I explained this already in this NLP communication model. Once you think everything is bullish, it's really hard to shift this thought process from bullish to bearish, or from bullish to neutralish. You can be neutral, of course, in a market. People, they tend to forget this, that it's okay to be neutralish, just to be neutral. You don't need to pick a side. It's bullish or bearish. Market is ranging often, and if the market is ranging, just it's okay to allow yourself to be neutral. But people often have a huge problem with being neutral and being flexible in their mindset. Hope this makes sense. If it doesn't, let me know in the chat comments. And then, of course, risk management. Ned Davis, when he was building his model, he had 9 rules. We will go through these rules, and then I think we will wrap up. It's one, don't fight the tape. Like, don't fight the trend. There's no point in fighting the trend. Don't fight the fat. It's impossible to win from the fat. And be aware of crowds at the extremes. Rely on objective indicators and be disciplined. I will give you some more examples of these rules. 6, risk management. 7, remain flexible. The cognitive flexibility, remain flexible and have objective indicators that helps you to determine if we are in a bullish zone, neutral zone, or a bearish zone. Have these indicators, have these rules implemented. Good money management rules, and study history. Study history, otherwise you will, you will tend to make the same mistake over and over and over again. So with the trend, There's no point in being a trend fighter. Up or down, always go with the trend. Go with momentum. Yes, there are like I do reversal trades. I'm way better in doing reversal trades than continuation trades. So I like to trade falling wedges. I like to trade inverse head and shoulders. I like to trade bullish divergence on the weekly or the daily or the 3-day charts. Um, I know that I'm pretty good in reversal trades rather than continuation trades. But I do have objective indicator that tells me, okay, this is maybe a good moment to trade and to go against the the main trend. But this is based on a strategy. I have an edge for that. But if you just see things going up and think, oh, price is really high, let me short this, this is not, this is just a gut feeling. This is not based on um, indicators, or this is not based on a objective measurement. This is just you trading your feelings. Don't trade your feelings, trade what the market is providing you, because your feelings about the market often comes from your P&L. Go with momentum. I do believe that a trend could be overly crowded. And that's maybe a good moment to scale out. Um, like for me, like a indicator I use is maybe the fear and greed index. I don't use it in isolation. I just, I use it in, I have a context for that. So if I see that everyone is bullish, and my barber is talking about Bitcoin. My father is talking about Bitcoin. My colleagues are talking about Bitcoin. When I pick my son up from school and all these other parents are talking about Bitcoin, then this gives me the impression that the trend is overly crowded and I need to be aware. And if you combine this with, let's say, bearish divergence, volume is declining, RSI divergence, um, you see some on-chain analytics that gives you a bearish scenario. That's for me a reason to be extra cautious, if this makes sense. With the Fed, this is a really relevant topic. Check the interest rates. It's important. Go to FX calendar or FX economy. Um, Keep track of all these important Fed and FOMC meetings. Normally, interest rates go up is bad for stocks. Down is good for stocks. It's the general simplified principle. Don't be a trend fighter, but be aware of overly crowded trends. Go with the momentum. So these are the extremes. I already gave you like a few examples, like how I think we reached an extreme level. Um, my question is, how do you determine an extreme level? And I'm pretty sure when we are at the extremes, we're extremely depressed because we entered like the bear market. We're extremely euphoric. If you're extremely euphoric, it's okay to feel this euphoria, but somehow you need to let this go. You're allowed to feel euphoria and then regulate this, manage it, and go back to your baseline and ask yourself, where are we now in this cycle? And don't look, please, for God's sake, don't look to your P&L when you're asking this question to yourself. Just look to the data, look to the charts. What are they telling you? It's signaling your message. If you're too euphoric, too happy, too glad, you're making a lot of money. This obviously can impact the fact it can influence your decision making process. Have a model for yourself. It doesn't matter what that warns you about extremes. It could be as simple as a RSI or a MACD or EMA if we are way above the 200 MA on the daily, for example. It should give you, you don't need per se to act upon it, but it should give you a warning sign at least. That's how I also measure the extremes. You also should understand that liquidity and sentiment are inversely correlated. Ask yourself, when there's a lot of liquidity, as in there's a lot of selling pressure, right? A lot of selling pressure. Who's buying? Nobody. Sentiment is low. What happens when the sentiment is high? Everyone wants to be part of the trend, right? There's not much liquidity, as in there are not much sellers. Everyone wants to be part of it. So understand that liquidity and psychology are inversely correlated. What you could do is check the charts on a weekly basis and see the volume of a specific month or specific range. I did this yesterday, where you check the since the May crash till June, July, around 6 million something bitcoins have been traded. If you check now the charts and the recent drop from 40K to 34K, beginning of this year, just 3 million bitcoins have been traded. This tells me something. I mean, it tells me something about liquidity. It tells me something about psychology. Hope it makes sense. So, the objective indicators. Ask yourself and write down, what are my objective indicators and how skilled am I in these indicators? For example, if it is an RSI, it's okay. And ask yourself, what could you do with an RSI? You could go to someone who's extremely experienced in this RSI, and ask yourself, how experienced am I against this person on a scale 1 to 10? If you don't have like objective indicators, you will be left with your gut feelings. You will be gut follower, and you will follow your emotions basically. So use non-emotional evidence. Could be anything. MACD, RSI, Replicator Pro, everything, and test your indicators. Do some back testing, and this way you will improve. It's easy as that. We already talked about discipline, your discipline leakers. Please write down your discipline leakers. You need to understand when you are not disciplined, and when you're not disciplined, that's maybe a good moment to just not trade, to do something else, because it's not worthwhile your money at all. It's not worthwhile your energy and your time. We all know this, but we cannot emphasize this enough. Knowing and doing is not the same, right? Keep your freaking losses small. Losers make big mistakes. Winners make small mistakes, period. Or let me reframe this. Good winners are good losers. I mean, a winner knows when he lost a trade and he just continues. He respects his plan, his stop loss, and he goes. He continues with trading. And then remain flexible, guys. You need to shift your buys. As I said, you cannot always stay bullish. Shift your buys from bullish to neutral to bearish and the other way around. If you marry with your bias, then you basically will trade against the trend. Another good question you could ask yourself is, how many times have you traded against the trend in the last 3, 4, 5, 6 months? And how biased are you? Do you have any model that helps you to determine your bias? So being right or making money, protecting money, I don't care about being right anymore. I just accept the randomness of the market. Yeah, and yeah, money management also important topic. I think we are about to wrap this up. Are there any questions for me, ladies and gentlemen, about trading psychology, mindset, NLP, about the content I just shared? Or someone wants to share with me one of his trading struggles? Maybe I could provide some tips and tricks. All right, quick chart requests. If not, let's call it a call. Let's call it a live stream. Thank you very much for joining me. There will be a recording available. Um, Wait, there's an interesting question popping up. I know there's a delay. When I talk, it takes around 5 6 seconds before you can hear me. How do you get better at conviction? Conviction and confidence comes with competence. You need to work first on your competences. You need to understand where you are right now with your competences. Um, what I would do is, John, not sure how long you're already into trading, but try to find someone whose style makes sense and try to model this person. Um, Try to learn from this person and try to implement his way of thinking and give it your own sauce if it makes sense. Conviction um, and confidence is I know good traders, I mean really good traders, when they have a series of losses they will lose their confidence. They don't have any conviction anymore. To fight this, to overcome this, I would say trade even you have, let's say, zero confidence anymore. You don't have any conviction, just trade, but lower your position size. Just lower your position size. Um, if you have a trading portfolio of, let's say, 100K or maybe easier number to 10K, and you normally risk 1% per trade, reduce it to zero point 0.1 or 0.5%. This way, you don't lose a lot of money and it will filter out a lot of emotions. And then conviction and confidence will kick in. I hope this helped, Joel. Partial saying, so I should change my bias in order to change my filter to allow myself to see better. Yeah, you should change your bias when your system is telling you so. But also have different filters. I mean, everyone has filters. We don't see the world how it is. In NLP, we often talk about we have a map of the world, and we don't see the world as how it is. We just see the world as how we are. Where to start as beginner, like learning FIPS, volume, order flow, what else, and about indicators. What are good indicators which we can use? There are lots of resources. I mean, you could just Google, or you could just check out our website, the Burp Desk. We have a lot of infographics. You can check out our YouTube. We have a lot of educational content there. We also provide the 7 days free trial where you can check out our Discord, our calls, the content we share. Um, you could do that. A little bit underrated, but just have the books. Really, man. Just also have the books. Buy a book, even if you're paying $100 or $200 for that. Just buy a book. Last year, I think I invested more than $1,500 just in education to improve my trading performance. $1,500, and it's worthwhile. I mean, don't be stingy. Don't Be generous when it comes to your own personal development. Just buy that book, um, watch the videos, and I would also say it's okay to have a general understanding of different indicators, trading styles, but just focus on one thing. Just be good. One thing. I focus in the last 2, 3 years on RSI, for example. Like one little knick right in the RSI, like one um, little movement tells me a lot of information. And this comes with a lot of practice. So have a general understanding, but specialize in one thing. Don't specialize in all of these things. Don't try to be a master in FIPS, volume, order flow, and all of that. Just like have the basic understandings and specialize in one thing. Um, Thank you for the question. Someone else, some other question. Yeah, thank you very much, Partial. Next time I will do a different live session. I want to thank you guys for joining me. If you have any questions, you can DM me on Twitter, or I see you just in the Discord. Have a nice evening. Bye bye, guys.